Pepsi is cutting its profit forecast for the year, citing tariffs and weaker consumer demand. That stock down about 3%. Let's bring in Filippo Falorni, Director, US Beverages, Household Products and Personal Care, lead analyst in that sector with Citi Research. Thank you very much for joining us, Filippo. Really appreciate it. So Pepsi, hardly surprisingly, worried about consumers, or at least concerned about softer consumer demand.
Yes, hi Andy, thanks for having me on. Yeah, so definitely look, Pepsi results were somewhat disappointing particularly on the outlook. I would say they lowered the full year EPS outlook to flat, excluding on a constant currency basis, or -3%, including currencies, from the prior expectation of mid-single-digit growth on a constant currency basis. They cited, to your point, tariffs, macroeconomic uncertainty, and a soft consumer backdrop as reason of the guidance cut. This was somewhat expected, but I would say, look, the magnitude of the revisions has been bigger than expected across the consumer staples group. From a consumer standpoint, look, I think the pressure, they remain more pronounced in North America for them, particularly in the salty snack side of their business, the Frito-Lay business. And the beverage side remains a bit better, a slight growth, 1% growth in the quarter, but the snacking side was down 2% organically. So that's really the pressure that they continue to see in North America.
The Robert F. Kennedy, the U.S. Health Secretary, this week called sugar poison, but he acknowledged that Washington was unlikely to be able to eliminate it from products. Yeah. Is that a threat, though, to Pepsi and other consumer products companies? I mean, let's face it, Pepsi makes a lot of junk food. Are they going to be hurt by Robert F. Kennedy's initiatives?
Yeah, no, absolutely. That was a lot of focus on Pepsi on the earnings call, particularly on two sides. To your point, the sugar side, look, they've done already. For many years, they've really pushed towards the zero sugar or the low sugar options in the beverage side, and they're going to continue really to push on that part of the business that is really low or no zero sugar. On the other portion is on really the dyes, given the announcement earlier this week from HHS and the FDA of really the phasing out of a lot of artificial dyes in the products. This impacts both the beverage and the salty snack side, but Pepsi mentioned that for many of their brands, they have plans to remove the artificial dyes by the end of this year. So they're really moving in that direction towards the better for you part of the portfolio. Obviously, the entire industry will have to go through this, so they're not going to be alone. And honestly, if you think about it, like the large-scale companies like the Pepsi, the Coca-Cola, the Keurig Dr. Pepper, in my mind, they're going to be in a relatively better position compared to smaller players because their supply chain is more sophisticated, and so they're going to be able to make those transitions a little bit easier than the rest of the industry.
So what is your actual rating on PepsiCo right now, Filippo?
Yeah, so we have a buy rating. Clearly, the near-term results have been pretty soft, but our view is that the valuation relative to their competitors is only at 17 times. Most of their peers trade between 23 and 24 times. And a lot of the weakness that you see in the near-term results seems to us reflected in the current valuation. Ultimately, you do need to see some level of improvement in volume trends, especially in the salty snacks, for the stock to really start to move forward. But we think at this level, you're somewhat protected on the downside from further big declines, and the upside optionality, it's all there if really they're able to turn around some of their businesses.
The yield about 4% now, 3.9%. Does Pepsi have a habit of increasing the dividend?
Yeah, absolutely. They announced a 5% increase in the dividend. So the dividend yield is also another important point to your point of the story here from a valuation standpoint. And they're also a very defensive company in the grand scheme of things, right? We're talking about relative to consensus a 3% earnings revision after today, which in the grand scheme of things compared to the S&P and other consumer sector, the consumer discretionary sector, is going to be relatively small compared to other companies that are going to have to take numbers down significantly more.
I suppose one worry among Pepsi investors must be consumers switching to store brand soda and store brand snacks because they're cheaper.
Yeah, so the private label has always been some kind of threat across the consumer staples sector. I would say for the beverage industry, it's pretty limited. If you look at private label penetration in sodas in the US, which is the largest market for sodas, it's really only around 5%, so mid-single digit exposure, compared to many other categories in food and household product, where private label penetration could be 15, 20%. So in beverages, pretty small. In snacks, it's been growing more recently because Walmart has made a bigger push towards private label snacks, but it remains also pretty manageable in the 5 to 6% range. So I would say it is a concern, but generally compared to other categories, it's less so than other staples categories.
Filippo, thank you very much indeed.
Thank you for having me.
Filippo Falorni is Director, U.S. Beverages, Household Products and Personal Care. He's the lead analyst in that sector with Citi Research.